Are you a real estate investor looking to sharpen your skills or a newbie looking to become one? You're in the right place. Welcome to Where Should I Invest? Real Estate Investing in Canada with your host, Sarah Larby.
Stefanie, welcome to the show. How are you?
I'm good, thanks. How are you?
Good, good. So I'm excited to have you on. I
Yeah,
think you're going to provide the audience a ton of great value and information. Maybe tell us a little bit about yourself, 30,000 foot view on who you are and what you do.
sure. Sounds good. So I am a real estate investor. I'll start off with that because I know your listeners will want to hear that. I've been investing in real estate, I would say, for the last probably 10 years or so. So dabbled in a little bit of maybe almost everything, probably not everything, but a bunch of different strategies. I love real estate, but I am also a CPA and I've spent the last 10 years in corporate finance. I did recently cut ties, and so I am a corporate finance escapee now. I'm full force into entrepreneurship, and I have a business called Real Estate Investing Finance, where I combine my love of real estate with my love of numbers, and now I help people, well, investors specifically, gain financial clarity, so they can level up their business with confidence. And I do that through CFO services.
All right, very cool. So let's just take it one step back from a real estate investor standpoint. What kind of strategy were you or are you doing right now from a real estate investing part?
So I would say my journey has been, I started a little bit with flips. I then went into single family and then single family conversions, like adding additional units. So I went into, I guess, multifamily just by doing that.
Mhm.
And then I did get into house hacking. I did that previously, and I also do that now. I am more of a passive investor now because my focus is my business right now. So I have gone and done private lending as well as like the GPLP, basically, passive
Mhm.
investments in that way.
Mhm.
I do want to get into international short-term rentals. That's my next thing that I'm looking at. But like I said, primarily right now, I'm trying to focus on growing my business and helping real estate investors in this space before I turn back to more active investments.
Yeah, no, very cool. Well, it's good that you have, an idea of the different strategies that many of us are utilizing and the pros and cons to that. But
Mhm.
maybe share with us. So how long has the business, been open for and what was it that originally you were like, I have to start this business?
Yeah, so it's been a slow progress in building the business because I was doing it on the side of having my 9 to 5. But I didn't then went pretty hard into growing it over my last maternity leave. So my last maternity leave was in 2023. And so I did start um, pushing harder with my business and growing it because I knew I didn't want to go back to my 9 to 5. Um, this was a way for me to really transition and get something more meaningful out of my life. I really wanted to help people and I wanted to use my existing skills to do so. And I knew that finances was an area that I absolutely loved, real estate investing I loved, and I saw a need in the industry. I saw that um, real estate investors hate working with their numbers. They stay far away from it. It's an area of confusion, it's an area of overwhelm, and it's actually the area that I love the most. So I felt like that would be an opportunity for me to help others in that area. And
Mhm.
just especially since the last couple of years have been extremely challenging for real estate investors, especially managing their cash flow. I feel like, again, this is an area that's really needed. Um, Coming out of this challenging time, investors need to do things differently.
Yeah, absolutely. I mean, the cash flow that we used to have is definitely not the cash flow that we're
There,
seeing right now.
exactly.
And so there's definitely that need to relook at everything and reanalyze everything. What are, maybe just give us an example of like somebody that you've helped recently, just a story so that people can really grasp like the different things that, they can work with you on.
Yeah, so I think one of the number one things is I would say at very least what all real estate investors should be doing is running a cash flow on a monthly basis because if you're removed from that process, you really don't see where your cash is going. And so taking a deeper look and all the income streams coming in and all the expenses going out, you'd be really surprised to kind of take a step back and see, you know, all the money just flowing in locations that you don't even know. And so when I work with my clients, there's a lot of surprise moments there where I identify areas in their business where they're spending a ton of money that they don't need to be spending on. And so sometimes, when you're in it for the long haul, you may have stepped away from that process of looking at your numbers. But I think that's the most important part, is having eyes on the numbers on a monthly basis. There's surprises that come up all the time. And there's surprises that snowball, like, for example, subscription fees, like they just get more and more and more and more to the point that they've gotten out of control. And so I think almost every client experience, identifying those areas of improvement in their business that they didn't have eyes on are those big aha moments that I deal with regularly.
So I think someone's probably listening to this thinking, okay, what is the difference, I guess, between a bookkeeper and your services? I mean, it sounds like you're providing some advice and feedback along the way, but maybe, if you wouldn't mind answering that for us.
Yeah, sure. So bookkeepers are really the ones that are entering the transactions into an accounting software. So normally once you're either have a corporation or you kind of gotten to the point where you're, maybe 3, 4, 5 properties in, you're probably starting to think about getting a bookkeeper and having all your data in an accounting software such as QuickBooks. So they're the ones that are really entering in the transactions for you and making sure everything's complete and attaching documentation. And so they're the ones housing the data. I would say that for the most part, bookkeepers then aren't doing much analyzing after that. There are some out there that may be doing that, but a lot of them I find do not. And so that's where my services then come in. I'm the one that would then go and, one, review all of the financials, and then 2, provide those business insights that are really needed for owners to make better decisions and to really know where they're going in terms of next steps. I'm the one that goes in there and flags certain things that are going on that you may not realize is going on, and really just helping you to understand your numbers and then to take that understanding and help you plan for the future and strategize for what's next and what's next to come. So that's basically the difference between the two of us.
Okay, awesome.
Yeah.
So with the clients that you're working on, maybe just if you could share, a few pieces of information that you're like, guys, if you're at home listening to this, check for, I don't know, maybe a certain expense or, certain things, insights that you're able to provide that somebody can maybe like action out on their own should they want to.
So I think that it really depends on your specific business. It is very dependent on your specific scenario, but a couple of things that I do find come to mind are always looking at the two sides of the equation, both income and expenses. I do think that there's a huge focus on expenses and cutting back and making sure you're super lean on expenses. And yes, that is one component of it. Of course, there's running down your entire P&L and asking yourself the question of, is this needed? How can I make this more efficient? Is it better to outsource? Is it better to do it myself? Asking yourself all of the questions possible and just brainstorming on all possible opportunities to change things in order to cut back on expenses or just make the operations more efficient. I mentioned subscriptions earlier because that has been like a big area that I find a lot of people have been getting caught on, is that you tend to like oversubscribe to stuff and then they just snowball and you don't realize how incredibly large it becomes. And some of those aren't really necessary for your business. Some of them are, but some of them are not. But I also think that the income side of things is really the area that people should be focusing on, especially now, because there's only so much you can cut back. But income is really unlimited. You can make an unlimited amount of income. And if you're in a cash flow deficit, I feel like that's probably the area you should focus on. How can I create additional income streams? How can I potentially pivot and do a different strategy to expand out my income in order to really protect my cash flow? So that I think is an area that we should put more focus on.
What are some examples that you can think of? Like if they're, a real estate investor and they have a handful of properties, maybe the cash
Hmm.
flow is not there. Some multis, maybe they have a little bit of an active business doing something. Like, what are some of the suggestions that, maybe could work for somebody today in today's market of creating either more sources of income, higher income?
Yeah, so again, it's very specific to your
Hmm.
situation, but I think obviously, the first question to ask is, are my rents are at market value? If they're not at market value, how can I increase them? Like, are you able to do a regular rent increase based on obviously the rules? If not, then how can I, work around that? Can I offer a tenant better services, more services? Can I renovate their unit in exchange for higher rent? So I would ask myself that question first. There's always the opportunity to pivot into a different step strategy. Obviously, if you have a single family home, can you add a unit and create um, multiple units? If you're in a multi-units, can you rent out by room instead of renting out the whole unit? Adding additional services, storage, trying to think of other options here, parking, um, you know, other strategies that you can increase the rent by providing additional options. Trying to think if there's anything else that come to mind.
Yeah,
Um,
sometimes it's like laundry. And you know what I'm thinking?
yes,
Like
laundry. That's another one. Yeah.
laundry parking, storage sheds, storage in
Yes.
general, garage
Hmm.
space.
But
Um,
then you can really just get super creative. Like it's really just knowing your tenant and what do they
yeah.
need and what would they go for, right? And can
Mhm.
you provide a service there to them
Right.
for whatever they need, right?
Sometimes I think of, that store Easy Home. I think that's what it's called. And they
Ah,
rent TVs and furniture by, I don't know if it's the week or whatnot.
yes.
But sometimes, that if you and your tenant agree on something, even just having like some bigger furniture pieces,
Available
and
to them.
increasing those by, whether it's a separate contract or something along those lines, or like as part of the higher rents that you guys agree on,
Yes.
would be something to consider.
Yeah, and when you brought that up, it just randomly popped in my head like something like a ride share. Like if you had an extra car, you could offer a car to them to use on I don't know, on a frequent basis or like a rental program, something like that. I don't know. I just feel like there's so many creative ways you can come up with if you know the need of your tenant, and
Hmm.
I feel like it's limitless.
Yeah, I think there's a company, Toro, that do it's like an Airbnb for cars. But I would just say
Exactly.
like you got to get the like also if you're going to do it separately with cars, get the proper insurance because you don't want to
Exactly.
be you don't
Yes,
want to
yes.
be caught there. I think Toro probably again, I'm not speaking from experience. I haven't used them, but I think
Yeah.
Toro does have at least some coverage or something. But even
Yes.
just like you think about like the big screen TVs, everybody wants a big screen TV. That's a tenant for
Hmm.
some reason. And so, at Easy Home when we had Matt's sister was our first tenant ever, and she was getting a bunch of stuff there, and it was like crazy. She was renting a TV for like $80. I think it was like
Oh,
biweekly or something. We're like,
that's so
okay, we're just gonna
interesting.
buy you a TV. Please return this one. But
Yeah.
it goes to show you there's a lot of people like they're clearly in business and they're probably doing well. And at some
Yeah.
point you make your money back. But I think something like that too is almost like more. I shouldn't say valuable, but it'll have a higher ROI on multifamily, when you're like tracking your NOI, your net operating income versus,
Hmm.
1 to 4 units. Once you get into some commercial properties and you're starting to really increase the income, I think that's where you're going to get your best bang for your buck.
Yes. And another point would be like separate from just making your property more efficient is
Hmm.
you as an owner, how can you create additional income streams, right? And so
Right.
obviously you have your rental income, maybe you have a 9 to 5, maybe you don't, but what other income streams can you then also expand out on, right? And um,
Hmm.
there's interest income if you're investing in the stock market, there's dividend income, right? And then there's other opportunities like business income, right? And that's again fully limitless. Like how can you package up a service based on the knowledge and experience that you have and then offer to other people, right? And so again, it's like how can you continue to expand in that area? And I think that That's a real key right now.
Yeah, I mean, like when I look at, for example, like my business with the real estate, there's a component that's actually active business,
Right.
right? The resorts
Mhm.
active business, the midterm rental properties as an active business.
Yes,
And so I think there's ways to balance out sometimes, the lack of cash flow in one avenue with trying to
hmm,
create additional income streams in a different avenue. And it may be more hands-on and more active than
exactly.
real estate. Even real estate is not fully passive.
Hmm.
Even a conversion is still more passive, in my opinion, than an active business.
Hmm.
There's employees or staff, and
Yes,
there's a lot more, I think, moving parts. I mean, obviously depending on the business, but it could be property management. You could be starting a cleaning company. Like,
yes.
it doesn't mean that you have to clean, but you got to hire
Hire
and find
people.
people. And
Hmm.
so are you suggesting that, people look at active businesses, like if they're looking for additional income?
Definitely, definitely. And that's exactly what I mean is that everyone's looking for more of that passive lifestyle. But I think if right now you're in a cash flow crunch, I think now is the time to turn to active, right? And creating those additional income streams. That doesn't mean, when things get better, you might find a way to make that active business passive. But I think that's an area that people can constantly look at and use their experience and their knowledge to create additional income streams there. I do notice a consistency with like large investors that are pretty solid in the industry, that they do have a component of a passive portfolio as well as an active portfolio, and I do see that being consistent.
That's interesting. So what are some examples of the active portfolio?
Well, I see, real estate, of course, in while you're in the real estate investing space, you do see a lot of complementary businesses coming out, right? Like a real estate agent, a
Hmm.
real estate broker, mortgage broker, property management, um, coaching. There's a ton of them that have come out just in the real estate investing space. But then, of course, people have their own skills and experiences as well, right? And so they may branch off and go into stuff that's unique, right? I can't think of any off the top of my head right now. I do see a lot of people focusing in the real estate investing space, maybe because they have the network there already, they have the knowledge there already, maybe they're passionate about it as well. And so I don't see many people like me offering CFO services, but that was my way of, creating an active business on the side as well, and staying in the same space that I love and have a passion for and want to provide a service to.
Okay. All right. Very cool. So if somebody has a bookkeeper already that's doing the books and doing the summaries and the statements, where do you come in and how do you support them while they're already currently, likely hiring and going to keep this bookkeeper?
Yeah, so I do support in different ways. So for entry level investors that don't have a bookkeeper, I have a service for them, and we can talk a little bit further about that. But specific to your question, when you already have a bookkeeper, I do tend to come in terms of my fractional CFO services when you're sort of more at a mid-sized level. So think, someone that's probably around, at least 5 properties or larger than that. And I'm the one that really comes in and helps to run the cash flows and give you the insights behind your cash flows and your business, doing the analytics and helping you see trends and helping you to really sit down and create financial goals and strategize in order to help you actually get to those goals. I then can also help with other services depending on your specific business. I can help with forecasting cash flow or creating like forecasted financial statements. I also do budgets. So if you're doing a renovation project or if you're doing some sort of coaches that potentially do conferences, I help with budgets to create some structure around planning that. If you have investors in your deals, I can also help with investor packaging, presenting financials to get investors to buy in and also providing quarterly updates. And so I can really cater my services directly to that specific business. Um, it's really about, again, like, where that investor is, where they are in terms of their journey, where they want to go, and how can I help them get there, and what are the services that I would suggest to help them get there. And so that's typically how I put together my packaging and support clients.
Okay. Now, from an active side, let's just say somebody has a property or like a design and decor business or property management business. Would you do the analysis on the active businesses? And, if so, what would that look like?
Yeah, so again, very specific to a certain business. My background is in financial planning and analysis. I feel like that is a very broad, financial experience. And so I feel like any of these active businesses I could help to provide services to. At the end of the day, it's a lot of planning that I help with, whether that be cash flow planning, budgeting for specific projects, helping to forecast, and ultimately it is just supporting the business in a financial, in the financial realm. And so that is an area that I do continue to help with. Like I mentioned, a lot of the bigger investors I find have both a passive portfolio as well as an active portfolio. So I do support both sides with those clients that I work with.
Okay. All right. Very cool. Now you mentioned, the packages for investors, and you also mentioned that you've been an LP in a structure, a GPLP structure as well, which I think, as people do bigger deals and more of them, they might consider that from a structure standpoint. But, oftentimes people bringing in investors in deals may not know what percent do I give away? What amount do I ask for? Even from an active business standpoint, right? What is the valuation of that business, that active business? If you don't mind sharing just some insights on that and what your thoughts are.
Oh, so interesting question. I don't think I have had too much exposure with business valuations. I definitely, when I'm investing in a deal, especially if it's passive or if it's a GPLP arrangement, I'm definitely asking a ton of questions regarding their financials and, the projections of that deal. I think more people need to be looking very closely at the financials and asking those questions and asking to, get the information of how they come up with their numbers. And so, that's definitely the route that I go. I get all the financials that they're doing their assumptions on, and I double check all of them myself. I then ask myself if I think it's a viable plan and whether they, do I actually think they're going to get where they say they're going to get, or if they're being overly aggressive to their targets. And so in terms of like percentages, I think it really does, again, depends so specifically on that deal, because it depends what they're bringing to the table for you, like in terms of, the value that they're providing in terms of cash flow or appreciation, or, are they giving back your capital and you continue to make money afterwards, or is the deal done once you get your capital back? And so I think it really does depend on, what they're offering you and their reliability to actually perform on that. That all then encompasses, whether I think the deal is worth it or not. Trying to think if there's
Is that something that you would help an invest, like somebody that's like pitching for the first time, would you help maneuver through all of that? Is that like your skill set?
I would definitely help support in terms of what financials they're going to be presenting and making sure that the analysis that they've done is sound. Because at the end of the day, if they're my client, I would not want to obviously jeopardize, them. And so I would want to help them to make sure that they're presenting it in a way that, one, is easy for the investors to understand, because, it's not always easy on the investor side to receive that information and understand what's going on. But that it also does make sense, and it is based on, financials that actually are sound and that are actually viable and are possible. So I would definitely help with packaging that up together. At the end of the day, as a CPA, I'm not able to advise on what to invest in and what not to invest in, because I'm not an investment advisor. But my skill set is more around the analyzation of of like someone's financials or a business's financials, and just, identifying, the pros and the cons. And then at the end of the day, you make the decision.
Yeah, for sure. Okay, cool. You mentioned bookkeepers and bookkeeping, and that's like, to me, probably one of my least favorite topics.
Yes.
Or things to do from a real estate standpoint. One of the first things I hired out as well along the way. And but when you're starting out, or if you're super organized, there might be some things that you could do first before necessarily hiring a bookkeeper. And I was hoping that you could share maybe a few tips. If somebody is buying their first or second or third property,
Yes.
they may still be able to do it themselves. What are some
Yes.
things they should be doing from a bookkeeping standpoint?
So, as mentioned previously, so I do have a service for beginner real estate investors that actually launched just a couple months ago, because I did want to make sure that I was able to serve all levels of investors. I think all levels of investors need, solid financial management help and support, and really it's the groundwork for when they scale. And so I think at very least, you should definitely be looking at your cash flow. So I do have a CFO Yourself downloadable program on my website where I include an e-course where I explain the 4 steps of financial clarity, where it's really about getting your finances in, like the structure of your finances in a good place, in order for it to be efficient, and then really just the habits and behaviors behind what you should be doing on a monthly basis to manage your finances. And so I include my cash flow tool where I have step-by-step videos of how to use the cash flow tool. And then it also includes a touch point with me. So I know finances are very specific. And so investors usually will have specific questions relating to their situation that they need answered. So that's where I have my touch point, so that you can talk to me and ask me those specific questions. I can help you work through the cash flow file. And I think that's the one thing that investors should be doing at the beginner level, is running through their cash flow, making sure they have accounted for all their income, all their expenses, and really seeing where their money is going. And then, having the supporting documentation in the background to support all of that, for year end. And if there's an audit, of course, you have everything ready and available for CRA.
Yeah, for sure. Now, in that, are you able to share a couple insights for what you might want to have in the cash flow analysis? Like for me, for example, when it comes to expenses, obviously taxes, mortgage, interest, payments, insurance, there's allocation towards capital expenditures, maintenance costs, yard care. Like what are some things aside, I guess, from that you might want to consider in the expense category as an example?
Sure. Yeah. So obviously you're putting in all the income sources that are coming from your property or your business. You're then, when you get to the expense side, like you mentioned, you're going to go through all of the expenses that are relating to your property management, insurance, taxes, utilities, any borrowing costs, any other repairs and maintenance that you're doing on a monthly basis. And after that is then when you really want to start thinking about the future. So, not necessarily income minus your expenses equals the cash you take away and run with, but really thinking about what's coming up in the future for you. So you should definitely be putting aside some money for as a vacancy reserve when your units turn over. If you plan to renovate and it will be vacant for a while, you want to think about any repairs and maintenance or capital expenditures that are on the horizon. Putting aside some funds on a monthly basis so you have a pool there available if something comes up. Or if you have a planned renovation coming up, you should definitely be planning for that ahead of time. Some other areas you might consider are if you're going to have a tax burden at the end of the year, maybe you're putting aside some money for your taxes. You could even have an emergency fund. Some people just like a very vague, big, bucket of money that if, something comes up and you need it, there's an emergency fund right there for you. And then the last one is if you are collecting last month's rent, Definitely something you should set aside. It is for the last month's rent. It's not cash flow to take out right now because, come that last month, you'll be out that cash. And so it is all about trying to, smooth out your cash flow so that you don't have these large, upticks and then huge negatives. And so the more you can kind of smooth it out and just, make things consistent every month, I think that's where the financial management is really helpful.
Yeah, for sure. And then property management too, right? If you're going to be hiring a property manager or also like allocating, I mean, I guess like if you're hiring somebody to do your leasing as well, like your last month's rent is probably mostly going to be gobbled up by the fee because you'll get first and last, and then they'll take usually the average, the average is 1 month's rent plus the HST. So you'll get the difference back. So just to keep that in mind. And then I think from the income side, obviously you've got your rents, you've got your parking, if there's parking, and guys, as a tip, please put parking as a separate contract, make it a commercial contract, not part of the standard lease. Because if you need to increase it or change it or take it away, it's not going to be part of the lawful rent. So it'll give you more control as a landlord, especially in places like Ontario. So I always do my parking as a separate thing. Even if it's just $25, like if I need to increase it to 100, I can, but if it's part of the lease, I can only go up whatever the lease is going to go up. Right. So keep parking separate, garage, sheds, laundry, all that stuff. So anything that you can look at from an income standpoint, utilities, depending, I try not like to just pass everything back to the tenants, even on a 4-unit. Like if there's not split utilities, you could usually do a percentage as an example. So you do that back. Vacancy, you mentioned vacancy. And I would say as a caveat, it's a lot harder right now to get tenants in that as fast as we used to be able to in many markets. So just to keep that in mind, you might have a little bit longer vacancy in between. Damages, and just like touch-ups between tenants. There's always going to be some cost there to consider. I mean, the list can definitely go on, but I think those are, some of the main income and expenses to consider for like your small, your small multis.
Yeah. It's bigger, about knowing your property, right? Knowing your property, what's on the horizon, even like knowing geographically where it is, what's the tenant situation there, and just putting plans in place in order to protect yourself from all different types of angles.
Yeah, for sure. Okay, awesome. So where can my listeners reach out and find out more if they wanted to know about your services?
Yeah, sure. My website is www.reifinance.ca. You can also reach out to me by email. It's Stefanie@reifinance.ca. And then I'm also on Instagram at reifinance.ca. So I hope that's easy enough to remember. And yeah, happy to chat finances. I love talking finances, real estate. So, reach out, chat, questions, all good.
Awesome. Stefanie, thank you so much for being on the show.
Thanks for having me.
Thanks so much for listening to Where Should I Invest with your host, Sarah Larby. Make sure to listen in next time. We'll catch you on the next episode of Where Should I Invest?